Yo, guys, what's up? It's another Schiller Learns episode. One thing that I do want to mention right off the bat, the inconvenience of a wireless mouse where you can't change the batteries and you have to have it plugged in. This is the way that I currently live my life, but we're here again with Charkie, the wizard from the Oakmont. We've had a couple different sessions regarding multiple different things, and to start off today, we might end up going back a little bit to the previous episode where we talked about stocks and options and some of the different terminologies. And for me, when we were going through it, I was like, for the tools and everything right now, I feel like I'm learning the terminology and then I'm wanting to jump into the tools. But Charky, as we're kicking things off, how are you doing today, boss?
Doing real good, Vaughn. Doing real good. So we had a pretty eventful week last week. At toward the end of the stream, we made some very bold calls about AMC, and AMC ended up jumping about 30% in the next few days. The option strategy that we kind of hinted at ended up going up to around 900% profit in little as 2 days. So the majority of the members in our Oakmont group were able to successfully close that trade, and now we're looking at things going forward. So yeah, like you said, I wanted to kind of touch back to things that we discussed in the other stream, and really break down to people the understanding between a strategy and an analysis. So for me, when I practice my trading, it's kind of like writing a story, right? Like I think me and you are writers, right? Like we write stories for different purposes. I look for things that happen in the market through technical analysis. I look for the market to tell me a story. Is it going up? Is it going down? And then I build a trade off of that. And that's when the option strategies come in. So this is SPY, obviously, as you know, the heartbeat of the market. Right now, we're in a little bit of a pullback. We've gone below some of our significant indicators. But I wanted to make sure that we went back and talked a little bit about the strategy that we discussed. So I'm going to go back to a ticker that I'm currently trading called GEVO, GEVO. And I wanted to discuss the option layout that we talked about last time. So currently, this is the trade that I'm in right now. So the ticker is GEVO, and the strike price that we're looking at is a $5 call. The expiration date is April 14th, and the premium that we purchased it at is 0.35. So as you recall through our previous course, GEVO is the name of the ticker, right? The company. $5 call is the name of the strike price. Essentially a target to go toward in terms of the actual price. The expiration date is when the contract reaches its full capability. And then the premium price is the amount that we pay. And remember, with the premium prices are always times 100. So even though it says 0.35, that's actually $35. So each of these contracts cost $35. Now, through my analysis, I'm seeing a pretty significant move higher for GEVO, somewhere in the 550 range, maybe even the lowest 520, 530. So what I did is I picked a contract that would allow me to benefit off of a move toward that range. So currently we're sitting around 475. This option price is actually down to 0.30. So it's a little bit of a discount now. So we're down a little bit under 20%. And so if my goal for this to reach is somewhere around, let's say 520, I need to find an option price that's going to allow me to make money if that move happens in the next, couple of hours, couple of days. So for me, April 14th gives me enough time. If we look at April 14th as far as how that goes, actually, let me move this over. April 14th is somewhere out here, right? And so that's how much time I have from today, April 1st, into the 14th to have a positive move upward. Now, you can see that orange line. That's kind of what I'm predicting right now, and I'll explain that in a bit why I think that's so. Now, why is this option going to make me money? Well, right now, if it's sitting at 476, a $1 move would bring it up to 576, right? So we're looking at somewhere up here, right? So I'm not predicting that high of a move. I'm predicting 520, 525, so about half of that. So 50-cent move. So remember last time we talked about the Greeks, right? The Greeks are what actually move the price of the premium. Delta is your friend and theta is your enemy. Now, those that weren't here last week, delta is the rate of change per dollar on the option premium. So every dollar that GVO moves, right, the actual stock price, the contract, this premium will move 44 or $44. Well, I only paid 35. So if GVO moves up a dollar from 476 to 576 in a short amount of time, I will make over 100% on this trade alone. Well, that's great, right? 100% return in a couple of days. I love that. What about the theta though? Remember, theta is our enemy. The decay is only 0.02 on that option. So that means that it's only going to lose $2 per day that this contract expires. So even if the move doesn't happen today, or maybe on Monday, or maybe even on Tuesday, I'm only going to lose $2, $4, maybe $6 at the worst. So I'm looking at maybe a drop of 20%. So it's really not too bad of a trade in my mind. Okay. So again, this is what we went over last week, and this is how to build it out. So now I would love to start talking a little bit more about strategy. So there is a strategy that I discussed last week that I have not shared with members. This is actually a brand new one for our community, something that we've never discussed about. It's called the Myckoff Method. Okay, so I will share this link, of course, in our Discord and on Twitter. Richard D. Myckoff, early 1900s. Analyst of stock markets, came up with this method. So I wanted to go through it really quickly and kind of melt your mind with how it's being applied currently. So basically, it's a 5-step approach. The first thing is determining the position and the possible future trend of a market. So are we heading upward or are we heading downward? Once you identify that trend, identify stocks that are moving in the same pattern. Straightforward. Then select stocks that have a cause, a reason why they're going to be moving in that direction. Determine if the stocks are ready to go. And then finally, time your commitment with the indexes such as SPY and QQQ. Okay, so find the trend, find stocks that are moving with it, find stocks that have a reason to move, find stocks that are ready to move, and then make sure that you commit to it. So just a very quick cycle. This is pretty straightforward. Everybody kind of knows this. When a stock is oversold, it's accumulated, it has a markup, the demand increases over the supply, prices go up. You hit a distribution area once it gets overbought. Supply becomes greater than demand. There's more traders than the actual price of it, so the price goes down. And this cycle repeats over time, over different time periods. Okay. Now, for Myckoff, there's actually a specific layout that he presents. So I'm going to actually walk you through how to be able to identify this. So I want you guys, if you're watching this right now, screenshot this on your own. I want you to have this on side to side as we're doing this. What we're going to find is not only is the market starting to set up this exact same pattern, but several other tickers, and especially, Vaughn, tickers that are related to crypto are moving in this direction. Okay, so that's big, right? Everybody's big on Ethereum right now. I'm a big fan of Ethereum Classic, ETC, Bitcoin, obviously, and then all of the other altcoins. But the altcoins are not going to move until Bitcoin and Ethereum move. So if the market is moving, then that's probably a good sign for that. So again, screenshot this, you guys, keep this on the side. All right. So going back to SPY, right, the heart of the market. This is the index that we want to take a look at. So looking at this, we had a high back in the end of December at 479, and we've basically been free falling since then, right? We set up a lower high, a lower low, a lower low, a lower low, right? Each time we're lower. But look what happened back in March. We set up a higher low. We're not dipping as much anymore. And now we're over here probably setting up an even higher low. So that is a trend reversal, right? It's starting to curve to the upside. So obviously if price, falls apart, then this theory doesn't work out. But as of now, it's setting up. So when we look at the Myckoff method, there's specific moments that we have to visually see prior to being able to decide if we're out of that system. So when we look at this, the first thing we're looking at is preliminary support. Where was the last spot where price bounced prior to the low of the price? So this is obviously the low here, right? This moment here. Nothing's lower than this. So this is the climax of the selling. Well, this low over here is what we call the PS, or the preliminary support. Okay, it got support here and it bounced back upward, but then it fell down. Okay, now this moment up here is what's known as an automatic rally. People just, as soon as they see markets bouncing, they jump in, right? They FOMO into it, and you get an automatic rally. But the rally doesn't actually stick through, and it falls apart. Okay, and that's called the ST, which is the secondary test. It comes back down and retests the need to go down, then bounces and ultimately fails. Okay, so now we have down here, this ends up being our selling climax. And how do we know that? Well, because it's the low. There's no other way to to identify that other than it's the lowest point in the chart in the recent time frame. After that, what you're gonna get, and this is very important for stocks and for options primarily, and we said this last week, the biggest difference between stocks and options is time. With options, time is not your friend. You need things to happen quickly. With stocks, you can take as much time as you want. You can hold a stock for 10 years and not lose any money. That's not the case with options. You need movement. Okay, so this is what we refer to as a spring. And how do we know it's a spring? Well, because price jumps up right after it. Right after the short, you get a bounce upward. Okay. Now, I'm sorry, I mixed these up. My bad. This is over here, and this is over here, and this is our spring. Okay, so we get the spring upward. We get a retest here, and then we get the bounce back upward. Okay, now we're gonna mark off these levels at the SC, at the spring, at the AR, and at the ST. Okay, so if anybody right now has it side to side, you're gonna start to see that this is starting to look a lot like this, right? Here's the PS, a dip down to the SC, bounce up to the AR. Here's the PS, dip to the SC, bounce up to the AR. The AR then goes down, retest, comes back up, and then fails. The AR comes back down, comes up, and then fails. It fails all the way down to the ST. So we actually probably don't have the spring yet. Sorry. This is over here. Here's the ST. ST and phase B. Here's that. Then we get the bounce upward. Fails at around the same levels as AR. Comes back down and then has the spring. So what we're going to be looking now is for this SOS or this triangle to be built. So can we go down further? I think we can. But what's going to end up happening is that we're going to start to develop some kind of a triangle here. Price will go up, will go down, will go up, will go down. And then once it breaks, we're going to get a large movement upward. Okay, again, look at the chart. It's about the same thing. Now, this is the market, right? This is the general market right now. If you look at our indicators that we talked about last time, our CCI is low, our stock RSI is low. This is an oversold area. So there's a good amount of energy for this to then go and move up. So this is the index, right? This is SPY as a whole. Now we've got to go look at charts to see if they also move in the same way. When we go back and we look at AMC, which we just had, AMC had the exact same movement. Here's the chart for AMC. Now, it already went through its SOS. It already broke out to the $34 range, but here it is. PS, bounce up, selling climax, AR, ST. PS, SC, AR, ST. Same exact movement, right? Here's the ST in phase B. You have the final spring down here, and then you have the move upward. Okay? Same exact chart. Now, the ones that I'm moving, and then we even talked about GIVO. GIVO is having something very similar. You guys can see it over and over again. And this is where like my mind kind of goes crazy, Vaughn, where I start seeing things in multiple places. And that's confirmation. when you have the same pattern, the same moves happening in different places, then you know with a very strong level of conviction that that move is going to happen. Thus, this is why I'm still bullish on the stock market as a general statement. And history proves that April is typically a bullish month.
So when you're going through these different tickers and stocks, you every time you've come in with like a specific one, right? Where like before it was AMC, this one it's GVO. How do you figure out what ones you're wanting to kind of pursue or look at, or do you just kind of go through a whole bunch and then you kind of find your ones that follow the patterns that you like?
There's a video that I was trained on back when I was an educator in elementary school, where they talked about cheating, right? In school, when we copy off of somebody else's notes, it's cheating, but in business, it's called collaboration, right? So I use every other source that's out there. I use Twitter, I use TikTok, I use everything that's out there, and I look for ideas. I look for people that are already 10 steps ahead of me, right? This AMC idea that I had, I actually kind of developed off of somebody else. They told me that AMC had the same chart as ETC, Ethereum Classic, and it did. It ran up the same way, and that led me to the Wyckoff method, right? And I said, okay, well, if the Wyckoff method says this, let me apply it to different stocks. And well, the first thing I did was I applied it to stocks that I knew. One of them being Mara. Right now, Mara is my favorite ticker to go absolutely nuts. Mara is a digital holding company. What do they hold? Primarily Bitcoin. Okay, look at Mara. Mara has the exact same chart that SPY, right? Here's a PS, SCAR, right? The spring down here on SPY. AMC had the exact same chart, same levels, right? Different time frames. Mara has yet to go through that. Mara has yet to go through that SOS. So I take a look at what everybody else is doing. I have my personal favorites. Mara right now is one of them. The other one that I actually think is going to be the biggest winner for crypto is Riot. Riot is another blockchain company, and look at their chart. This is actually my. I mean, I don't want to give picks, because if it's wrong, then everybody chews me off. But this is one right now that's my probably besides Mara my absolute favorite. It's so great. It's so set up for a huge position. It's been downtrending for so long. It finished a 5-wave cycle to the downside. If I zoom out, we did Elliott wave last time, right? It finished a 5-wave cycle to the downside. Actually, this should be up here. 5-wave cycle to the downside, and now it's barely starting to break up. If we go to a smaller time frame, the 1-hour chart, you see that same exact pattern, right? Going on. Other stocks, GameStop, right? GameStop just blew up. Everybody's like, how do we know that? Well, it did the same exact thing, right? Did I know that they were gonna have a stock dividend? They were gonna split and file for that? I didn't know that. I'm not an insider, but all I did was set up an analysis and a trade. And once that moment happened, then it kind of just pushed everything up.
Yeah, I love it. I love it. And I mean, Charky, if there's one thing that you kind of want people to take away from this lesson in particular, what is it?
I think that for you to be truly successful long term is try not to predict these movements. Set up the analysis, set up trades, and then once you're confirmed, then react, because you'll be much more profitable long term. Like me, I can afford to lose, certain trades looking for that huge banger of 1,000% trade.
Banger.
Not, yeah. AMC just printed for that much, right? Like if we look at Riot's one of my favorites right now. I have a target of at least 25. If I look at the pricing of a Riot call within its chain, it's close to 600% if it reaches those numbers, right? So other than NFTs and probably crypto, nowhere else can you get that kind of percentage gain for what I think is a minimal risk than with options trades, and specifically with the debit call or debit put spreads. I think those are essential, and I think in the next video we'll start setting those up. But just to kind of wrap up, I do think that SPY, the market will trend a little bit further down. 444 is kind of what I'm targeting. The previous high up here, 448 is a support right now, but I would like it to be somewhere in there to really buy in. If you buy now, I mean, you're going to be okay, but don't be surprised if it goes down more today or more down on Monday, and then you sell and then it bounces back up because it's happened 1,000 times. Um, but for me, I think the best bets right now are Mara, Mara, Riot, Givo, which is basically a penny stock. So you can actually do stocks instead of options on there, but they do have options. And then Jamia is another one that I really like. It has the exact same pattern as the rest of the stocks do. And yeah, and even AMC and GME, I still think that they have more room up. I still think that they got more room up. Even if they're going to continue to go down, they're going to start to bounce a little bit. We're getting very oversold on these indicators. So yeah.
Yo, love it. Listen, Charky, love chatting with you every single week. And guys, if you're enjoying these lessons that we do have, be sure to go back and check out the previous videos. And if you're wanting kind of one-on-one sessions or to learn a little bit more and talk with the entire Oakmont community, you're able to follow them at the Oakmont on Twitter. But I appreciate you guys tuning in. I hope you enjoy your weekend. And Charky, thanks so much for jumping on as always.
Thank you so much. Look forward to next week.